Okay, chapter 7, yeah, which is financial leverage. Yeah. What is financial leverage is all about? Okay, at the end of this chapter, you will be able to learn on overview of financial leverage and then types of leverage and then leverage analysis. As usual, yeah, 7.3 is about calculation and the other two is about theory part, yeah, and then understand the formula. Okay, what is overview of financial leverage? Yeah, it results from the use of fixed cost asset or funds to magnify returns to the firm's owner. Yeah, okay. In other words, yeah, how efficient the fixed cost assets operate in order to generate the return. And sometimes also, yeah, in other words, leverage means cost control to magnify desired profit. Cost control means that they want to control expenses in order to generate the desired return. Logically, if cost is too high, yeah, the return or profit will become too low. Okay, hopefully you understand what I mean. If the cost, yeah, or the expenses is very high, yeah, therefore, yeah, the profit will become low. Yeah, because the money out, yeah, is so many. Yeah, if possible, yeah, for the company, yeah, that the better the revenue, the profit it will be. Okay, so in terms of cost control, they also have an element of the use of fixed cost asset, whereby it is consists of the first one, cost of goods sold, yeah, whereby the asset involved is inventory. Okay, you know COGS, right? COGS is a cost of sales. And then the second one, operating expenses, whereby asset involved in cash, marketable securities, accounts receivable, and prepayment. This one is more on we talking about day-to-day expenses. And the last one, interest, whereby it involves cost of financing fixed asset. So that's why, as you can see, this bowl here are the asset, but you need to bear in mind, that you need to question, where the company, got the money to have those kind of asset. Yeah. So therefore, in order to get an asset, they need to spend something, whereby these are the expenses that involve in getting the asset of the company. All right. So yeah, we're talking about cost of goods sold, operating expenses, and interest, in income statement. That is referring to cost control. Okay, let me give you an example. Not example. Analogy. Analogy that relates to cost control. Okay, let's say the revenue. Okay, this one I highlighted it. Okay, I do a table comparison. Okay, this one. Um, Situation A and situation B. Okay, this is a simple one. Let's say the revenue, okay, the revenue or sales, let's say is equal to 1 million ringgit. Okay, and then costs, or expenses. Okay, let's say if the cost is 400,000. Okay, the cost is 400,000. Okay, what will happen is, the profit will be 600,000, right? Okay, so that is a first situation. Oh, I should go for another situation, which is situation C. Okay. Okay, let's have a look at if situation B, which is increased cost. Okay, and situation C is referring to decreased cost. What will happen to the profit if leverage is happen? That means cost control. Let's say if situation B increase cost from 400,000 to 700,000. Okay, so what will happen to the profit will be 1 million minus 700,000, it will become 300,000. Yeah. But let's say what happened for situation C if they decrease cost. Decrease cost, that means from situation A Yeah, 400,000 decreased to 200,000. Okay, so 1 million minus 200,000 is 800,000. Okay, so as you can see here, yeah, if sorry, situation B profit is 300,000, but situation C profit is 800,000. What does that mean? Yeah, that means if the cost or expenses increases, the profit will become lower. But if cost or expenses is decreasing, which is cut cost, the profit will become higher, which is 800,000. So most of the companies use a leverage opportunity strategy to control the cost. What does that mean? Is they are cutting the cost, unnecessary cost. So the better or the higher cost they are cutting, the possibility of profit will become better. So that is how leverage is playing, to magnify desired profit. We're talking about 600,000, 800,000 profit and so on earlier. We talked about. Okay, there are three types of leverage. The first one is operating leverage, second one financial leverage, and the third one total leverage. Okay, have a look at these three types. What are the differences between those three? Okay, the first one, operating leverage, concerned with the relationship between the firm's sales revenue and its EBIT, whereby earnings before interest and taxes of operating profit. Okay, the word operating says everything, okay, whereby it is more on cutting costs in operation. Okay, the second one, financial leverage, which is cutting costs on financial matters, concerned with the relationship between the firm's EBIT and its common stock earning per share, EPS or net profit. Usually the cost that associated with financial leverage is interest. And then the last one, total leverage. The word total stands for combination between number one and combination number two, concerned with the relationship between the firm's sale revenue and EPS. In other words, total leverage is equal to number one, total operating leverage, plus number two, financial leverage. So as you can see here, this one, degree of operating leverage, that means DOL. Okay, and financial leverage, which is DFL. And then total leverage, which is DTL. Okay, so operating leverage, earnings before interest and tax is a benchmark between DOL and DFL. Okay, so that's why if you read the news, business news, in TV or newspaper, they always say about EBIT instead of net profit. Because what we call as interest and tax is subjected to how much loan that they borrow from the bank and how much income tax that they have to pay. So we have three elements: DOL, DFL, and DTL, which later on you will cover in the calculation. Okay, let's have a look at leverage analysis, operating leverage. So these are the formula. I give you 30 seconds to familiar with the formula. DOL is equal to percentage change in EBIT divided by percentage change in sale, or gross profit divided by EBIT. Okay, in other words, gross profit also can be known as contribution margin. Later on, I will explain in the question. Some question they give what gross profit as a contribution margin. Okay, so later on we will see. Okay, so 30 seconds starts from now. You familiar with this one first? Okay, the next one is financial leverage analysis. Okay, so here is the formula: percentage change of EPS divided by percentage change in EBIT, or EBIT divided by EBIT minus interest. Okay. Okay, 30 seconds. Please familiar with the formula. Okay, and the last one, total leverage analysis. Yeah. So these are the formula: percentage change in EPS divided by percentage change in sale, or DOL multiplied by DFL. Okay, 30 seconds. Okay, done. Okay, here doesn't have an example, but I will show you the demo on how to answer those questions. Yeah. Okay, let's have a look at question number 6. Yeah, I give you 1 minute, yeah, to have a look first. Yeah, 1 minute, have a look first, and see how the questions looks like. Sorry. Question 6. Okay, question 6 first. Question 6. Yeah. Okay, yeah. Question 6. At the same time, Abang Jamil also has to analyze in the financial leverage of the company in order to magnify the desired net profit. Below here is the income statement information for the year 2014. So they give you this standard, yeah, sales less variable cost become contribution margin. Okay, please bear in mind, yeah, that the other name for contribution margin is also known as gross profit. Okay, the other name of contribution margin is known as gross profit. Less fixed cost, it will become this one, yeah, EBIT, earnings before interest and tax. Less interest, it will become earnings before tax. Less tax, it will become net profit. Okay, so question A, calculate the degree of operating leverage. But if you see this, calculate the operating leverage, DOL, gross profit divided by EBIT. Okay, so question 6. Degree of operating leverage, I just put degree of operating leverage, which is DOL. So the formula will be gross profit right. So where do we get these figures? Okay, gross profit, have a look at the question. This one, gross profit, 1.2 million. This one. Divided by EBIT. EBIT is this one. Yeah, 700,000. Okay, so press calculator, you will get the desired answer. 1,200,000 divided by 700,000. Take two decimal point, which is 1.71 times. Yeah. Okay, so that is the first question. Only 2 marks. It's simple as that. Only 2 marks. Okay, have a look at second question. Estimate the degree of financing leverage. Degree of financing leverage, which is DFL. Okay, so the formula will be EBIT divided by EBIT minus interest. Okay, so these are the formula. Okay, EBIT divided by EBIT minus interest. Okay, again, you have EBIT here, or if you feel not confident, you can refer back to this one, 700,000. Divided by 700,000 minus interest. Okay, interest is here, this one, less interest, 300,000. Ignore the negative sign, ignore the negative sign, just take the value. Okay, so 700,000 divided by 700,000 minus 300,000, 1.75. Okay, have a look at the question. Compute the degree of total leverage. ETL. Okay, equals to DOL multiplied by DFL. Okay, that means answer number 1, answer A multiplied by answer B. In this case, 1.71 times multiplied by 1.75 times, which is equals to 1.71 multiplied by 1.75, 2.99. Okay, so that is a third question. Alright, question D and question E is quite tricky a little bit, because they tested you to see which formula is associated with two elements. Okay, so if EBIT increased by 35%, how much is the percentage change in EPS? Okay, so tips to answer this one is, you look at this one, EBIT, and you look at this one, EPS. What are the formula that associated with those two? Okay, EBIT, EPS. So stick in mind EBIT and EPS. Okay, for this one, EBIT and sale, this one is not a formula. EPS and EBIT, yes, that might be a right formula. Yes, EBIT, EPS, and this one EBIT, EPS. So therefore, the formula will be DFL. This one cannot because EPS and sale. So DFL is a suitable formula to answer question D. DFL is equal to, okay, refer back, percentage change in EPS divided by percentage change in EBIT. Okay. Alright. Percentage, DFL, for DFL value, okay, DFL value, take from here, this one, because you got DFL 1.75 times. This is a situation whereby you will play with the figures. Okay, percentage change in EPS, because you want to find this one, divided by percentage change EBIT, this one, EBIT increased by 35%, you see? EBIT increased by 35%, so this one, 35%. Okay, so therefore, in order to find this one, percentage change in EPS, 35%, bring it at the left side, it will become multiplied. So you don't have to divide it by 100. So you just 35 multiplied by 1.75, you get 61.25%. If you want to check the answer back, 61.25% divided by 35, you still get 1.775. So you just straight away multiply without converting percentage to round numbers. So that is the first question. Question D. The last one. If sales should increase by 45%, how much percentage would EBIT increases? Again, you need to look at two elements, sales and EBIT. What is the formula that associated with sales and EBIT? Let's have a look. This one cannot because EBIT and EPS. This one EBIT and sale, okay, probably yes. But this one sales EPS cannot. Yeah, so EBIT and sales, which is DOL. So to answer that, yeah, DOL is the formula to use. Okay, for DOL, percentage in EBIT divided by percentage change in sale. Okay. Alright, DOL, you got the figures already at the question A, 1.71 times this one, DOL. Okay, set. Okay, percentage change, sorry, look back the question. Percentage change in EBIT or increases is the answer that you want to find. Percentage change in sale, this one, if sales to increase by 45%. Okay, so (1.71) multiplied by 45%, 76.95%. So if you divide it by 45, you still get 1.771. Okay, done with this question 6. Okay, you can snap the picture here. Let me know if you are done.
Done, sir.
Done, Okay. How about the others? Done, You done? Okay, the other question are also same procedure. Yeah, of course, yeah, you need to calculate DOL first, and then DFL, and then DTL, and then two questions that related to playing figures. Okay, so let's have a look at the other question. There is nothing much. This is a similar question. Okay, there is nothing about this one. Question 5 is okay for me. Contribution margin also known as fixed gross profit. Just bear in mind. Okay, contribution margin is gross profit also. Okay. Alright, this one, revenue before fixed cost is also known as contribution margin, is also known as gross profit. Okay, usually at line number 3. Yeah, usually at line number 3. Kering. Akan siap. Alright, sekejap lagi. Jumpa kan? Okay. Alright. Question number 2, contribution margin is the same thing. Yeah, which is gross profit. Okay. Revenue before fixed cost also known as gross profit as well. Nothing much. I mean, like the question is almost similar, and then I believe you can do it. Yeah, because previous semester most of them are scored. Yeah. Okay, so I think there is nothing much to discuss about. Yeah, I mean the question is quite easy. Yeah, that is the easiest chapter. Okay, done. All right. Any question? Any question?
No,
Okay,
sir.
how about the others? Okay, feeling good,